All right, good morning. So, this is my only day of the week that I'll be trading. This is my only day of the week I'll be making a video. Tomorrow morning, very early, before the sun rises, I'll be leaving for the rest of the week. And I'll then be returning late Friday. So, I wanted to start this video as I was setting up the charts for this morning, and I'm already starting to see some interesting action take place. And what I want to do is sort of in real time talk about what I'd be looking for if I were getting ready to take a trade right now. So what you can see at this moment is this is the hour chart for Monday morning, the 18th at 6:40 a.m. in the morning, pre-market East Coast time for the New York Stock Exchange. This is the 1 hour time frame. So you see in this pre-market or / overnight session here that we are short trend is in the downward direction. Overall, the macro trend is still up. I don't want to say necessarily consolidating. We had a nice clean pullback last Tuesday. We did break out for higher highs. And then ever since Thursday, we've just been pulling back. But we haven't broken lower lows yet, so we're not in an overall downtrend. We are just starting to consolidate / curl a little bit, meaning that we don't really know what's going to happen. There isn't very much economic news right now coming out today, other than oil is still over $100 a barrel. Iran and U.S. are still in the midst of trying to figure out how to negotiate an end to what's going on over there, which allows the market to stay semi-volatile and run up, run down. So what I'm looking at, getting right into it, is what we talked about last week is, remember, steps 1, steps 2, if you're an inconsistent trader that isn't pulling regular paychecks out of prop firms, or hopefully not your personal cash account, because then that just means you're sort of losing that money. But if you're working with prop firms, and specifically either the MES or NQ, which are the two that I trade, with those prop firms, then you want to stay downsized, right? You don't want to trade full contracts, especially if you're on the 50K accounts. Even on the 100K account, I would still be really sub 1 full contract. Go with the micros. Next to that, don't DCA. There are times where you can add to a winner, but currently I would just take your small wins, be happy, because your small wins will also really just mean your small losses. And your small losses are what you're trying to figure out how to keep consistent, right? You don't want to have a small loss, small win, huge loss. You want to be able to reverse that, have a lot of big wins, have a lot of small wins, have some few losses, and that they're all small, and none of the massive losses that obliterate your accounts. So for instance, right now, we're on the 1 hour chart of the MNQ, micros for the NASDAQ. And we see we are in a downtrend, right? We got this nice bear flag right here coming in from Friday in the overnight. We are creating a new bear flag, and it looks really solid. If you look across the line here, right, you see where we closed on Friday has been held as somewhat of a support. It was support, sellers stepped in and pushed it down. Bulls brought it back up. Sellers tried. They stopped just below that point, right around here. They pushed it back up for higher highs. It then had a pullback, again, right to the same area, right? So in between, 233 and 103, the bears and bulls are fighting for their edge. Bulls again win, it pushes out forward, it's pulled back, not quite a new lower low compared to this, but we are breaking between these lows here. Bulls try to push it back up, and where do they fail? They fail to beat out the sellers in the exact same spot. So this has become an interesting point. Now down here would be the next interesting point. Support, a break, and support. So you're thinking to myself, oh man, if it breaks 100, you got the psychological break of 100, and we've got a nice bear flag. We're in a short-term downtrend. We've got a ways to go to touch this, and all that may be true, and you may be right. So you think yourself, right? Well, I'm going to take the break right here, and I'm going to short. First thing you ask yourself is, where is currently on the hour basis? Where is your stop? Well, your stop's at 231. You'll never survive that pullback. All right, so you're going to be just hopeful that you can get down to at least equal lows. Okay. So how do we enter? And do we enter? Well, I'm going to say no, not yet. I'm going to say you don't want this trade. And I'll show you why. Even though it looks like a perfect bear setup and it might work out that way, I'm going to show you why I just personally wouldn't take it. I'm going to throw on my indicators and my lines. Well, I guess just my lines today. So a lot of stuff, it looks like a lot of stuff is going on here, but again, we are on the hour chart. So let's raise this up a little bit. All right, get some stuff out of the way there and just focus in on this area. So remember, we have that short-term downtrend. This is just the hour zoomed in. We had up here, we had kind of resistance, currently resistance, but was support for a while. Down here, we have been holding the support. And what do we have right here where this is starting to back off of? We have the previous week's value area low. So all of last week, this was discount. This is where buyers felt comfortable buying up again. All right, we have Friday's low of day right here. This is the lowest point the sellers could get to until the overnight session. And we have what was generally the support, one break, and currently holding support. So if you thought it was a good idea to go in on the break of 100, thinking you're going to get equal lows, you're already getting pulled back. Only by 14, 15 points right now. Now imagine one full-size contract, you're already down $300. So that's not good. So what would we be waiting for? Let's say we really want to take this trade. Let's say we are going to go with conclusion analysis is that this is going to go short. All right, we're gonna go lower. So how do we do that? Well, we got to figure out if we can. So let's get out of the hour. Let's go to the 15. All right, 15 pulled back through here, consolidated. This is a lot of mess to me. I'm not a big fan of trying to trade when it almost starts to barcode like this, because this is just buyers and sellers battling back and forth. It tells me I don't know which direction it's going to go in very well. This is a little cleaner, right? I mean, if you were on the opposite side of this right here, that's clean. Okay, that feels good. This doesn't feel so good. So already that tells me I don't know how much I like this short, even though it looked really good on the hour. I can see that it's finding support in that bear flag on the previous week's value area low and Friday's low of day. And so let's still say we're going to battle, even though we don't like this mess, and even though it's finding support, let's say we're going to go, okay, if it gives out, we'll still go short. Well, we got to find where this trade would become invalid. So this is the 15. In order to do that, I'm going to trade off the 1 and the 5. So I'm going to go down to the 5 minute. So if I'm really going to try to take this trade, and I'm heavily inclined not to. In fact, I'm not going to take this trade, but we're just pretending that we're going to take this trade. How are we going to get in here? So currently on the 5 minute, 152 is the previous resistance. It's working its way back up there now. Its support is at 82. So if you take the break, let's say 79, that's still too far. That's 70 points. Can't go there. This 5 minute, this is not going to give us a much better resistance here. Honestly, it's already at 132 and climbing. So if we really wanted to take this trade, we have our area of interest. You see here, this is the box. We'd want to get out of that box. We would need to define where this trade would be invalid. Well, I'd want it to break through this box and retest. So really what I'd be looking for is something along the lines of pathing. If I can do it, that would be nice, right? Pathing would come down. We're going to break through. We're not going to take the trade. We're going to come back up knowing NQ, it's not going to stop on the line. We'll call it like 105. And then let's say it starts to break here. And our goal would probably be overnight lows. So where would I be getting in? If this were the 5 minute chart, I would say, okay, I'm going to put my stop 114, let's say. And then I'm going to go back in on this break right here, below here. So that's still pretty far right there. That's 25 to 14, 15. I mean, that's still, man, that's still 40 points. That's not fun. Can we at least get 40 points out of it? Easily, right? Even if we just work down to the bottom of this range here. So it's a fair trade. If it weren't for all this mess and this were just straight up, I'd be much more excited about the potential of taking that trade. I mean, preferably, right, it looks more like this. This is the real ideal trade. You know, so you get in there, right? You've got here 98, doesn't ever reach higher, and then you can just sort of take the break right there. 77, now you're only around 20 points. That would be a great trade. It doesn't often work that way. This is again why I say don't trade full-size contracts, because you don't want to take a 40-point loss with one full-size contract. That's wild. And if you can get even 2, 3, 4, at most 5 micros down to the overnight low, you calculate that income, I mean, that's a week's worth of income for a lot of people, maybe even you. You know, if you get half that, that's still more than probably your day's income, right? I mean, I'm just guessing. I figure if you're already making $500,000 a year, you're probably not day trading prop firms. If you're a blue collar guy, if you're in college, if you're working minimum wage, this is still a lot of money for just 2 or 3 size micros. And you just have to really remember that at the end of the day. Now, I'm not going to take this trade because of all this. So even if it did take that break, that's not what I'd be looking for. Right? I'm trying to put myself at the best odds possible. So even though I have this box as an area of interest, when I break it down to the smaller time frame, I'm not that interested. So what this box is telling me is that, okay, we just know we have a support here, but realistically, I would be looking much lower. So if we come down here and we take out the overnight lows, and I start looking left, we have this V-shaped recovery here. I find that V-shaped recoveries can very easily be torn right through, right? This is a little hard. This does not look like a V-shaped recovery. This looks like a V-shaped recovery. So if we were to break the overnight low, again, pathing, right? We come down here with good strength. We come down here. We find resistance at the overnight low, right? Maybe it flutters around for a minute, and then off we go down to the next support. That right there is a good trade. Okay? Looking up higher, again, you see all these lines. You're like, well, this looks really messy. It looks like there's a lot on the chart. Exactly. It looks like there's a lot on the chart in front of you. Maybe not take a trade right away. Overnight high, if you do take out the overnight highs, it's not so bad, but you do have the point of control for Friday and for the entire week just above you. So if you are going to take this trade, right, allow it to take out the overnight high, and then I would sell into point of control from Friday, right? Still, it's not a bad trade, a little riskier because we are in the short-term downtrend, even though macro, we're in the long trend. If we go higher, we take out the value area high, we do have a decent amount of sellers that were sitting here on Friday. So if we were looking for value area high from Friday, I would kind of want to see very good bullish strength, right? I don't want to see it kind of chop around here and then grind its way up. I kind of want to see it blow through those sellers, come back, and maybe not even test value area high, right? And then see a bullish reaction. You can either take the break of the new resistance point, or once you see the bullish reaction, somewhere between value area high and this node here, this is just a high value node from last week, then you go in right away. And again, you can either choose, if you want to be conservative, your short would be just under the new support or back under value area high. Just remember that in Q, I mean, you probably know this, but in Q, even if it does this, it looks good. It has a tendency to do this, right? A lot. So you want to really think about where your stop is so you don't get needlessly stopped out. You know, you keep them too tight on the NQ, you will get hit. Even when it looks good in the beginning, this is often what it turns into before it goes. So again, if you're unsure, don't DCA. Just wait. If you're like, hey, you know what? I really needed to hit the support before I feel comfortable going in. All right, fine. And if it doesn't and you miss the trade, so be it. There's always going to be another trade, right? Once we get to high of day, well, we had resistance, we've got support. I mean, this might hold. If we get to high of day, you can look for, right, a look and fail like this, right? If that doesn't happen, then you would look for a breakout and hold, right? Up to, well, at least first, previous week value area high. You know, what you want to do is you just want to wait for the market a little bit to give you some type of reaction. I'm not saying be so conservative and wait for so long that you like create an increased amount of risk, but you don't necessarily just want to go in because it hit your point. Like allow it to, you know, look at your volume, look at your time in sales, look at Bookmap, and see if you see either buyers continuing to buy or sellers starting to step in and sell, or in the opposite, sellers continuing to sell or buyers starting to step in and allow it to reverse. So you're just looking for that reaction. And what I can tell you is, you know, Monday, I'm not usually super aggressive on Monday as I'm not super aggressive on Friday. I like to start my week off clean. Nice base hits, get me going for the week. And on Friday, I like to end my week ideally green, just because, you know, who wants to go home with a red day on Friday? So Mondays, Fridays, a little bit more conservative. And so what that means is I'll probably wait for the first 30 minutes to open, and I can add in my initial balance high or initial balance low, or what we call the 30-minute orb, either way. And remember, just look for your areas of interest first, define your risk, then that will give you your size, and then you can hit your target. And if you're trading on Apex and you're trailing, just keep your stop trailing with you. If you're on Take Profit Trader, you know, you can try to allow it to run, and then just, I would say, reduce your risk to 0 when the time is appropriate. Usually when you're at least, you know, if you're a 1.5 already, you know, yeah, take the risk off the table if you're trying to let that hit 2. If you're just hitting a 1-to-1 and you feel it starting to come back on you, just, you know, let it hit 1-to-1, no problem. And then just to end the video, right back where we started, right? We were looking at this down on the hour. This started looking really good for a short. It bounced up. It's keeping this current resistance right here, and now it's starting to head back down. Remember, if we were to get down here, you don't want to just go in on the break, even though it could continue. That's a little risky because your current resistance is at 145. So the first thing you try to do is when you get to your area of interest and you're looking for that entry, try to find the best way to minimize your risk. And that's using ideally the most recent swing high or swing low, depending on what direction you're going in. And then don't move your stop. I think that's one thing I don't talk about enough. I've done that too many times where I put my stop in, it starts to grind its way back, and I think, no, you know, I'm still really on the idea that I'm bearish, so I'm going to move my stop so I don't get needlessly stopped out. And then I do. Then I start going deeper in the red, and then eventually I take out the stop because I'm like, well, I can't be stopped out this far behind. You know, now I'm 60 points down instead of my original 20. Just take the stop and then re-enter. And I tell you, I have done that to a much higher benefit for myself, where I've been stopped out 2 times, 3 times even, before my trade actually took place. And maybe that only got me back to break even, and that's not fun, and there really wasn't much I could do about it. I look back and I say, well, I didn't really have a better entry. It just kept consolidating on me until it broke. But at the very least, I didn't take one massive, you know, 80-point loss. I just took 2, maybe 15, 20-point losses before the break, and a couple times I've taken 3. And I still suggest, even on that, if you're getting stopped out twice in a row, probably stop, zoom back out, and make sure, right? Like if you were to say, well, you know, with all this here, this mess, and these value area lows, the lows of days where people think they're going to go short, I'm going to go long. Great. So you go long, and then it comes and it cuts you out, right? So now you're stopped out. And it comes down here like, I'm definitely going to go long, and it comes up, and then maybe it comes back down and it swipes you out, and you're out again. Instead of going in a third time, maybe just take a step back, take a look, like zoom out, right? I'm on the 5-minute, but really when I'm trading, this is far more what it looks like. I mean, look at this, right? Suddenly, all these lines on my left side, you can't even see them. You see one thing. You see just yesterday's low of day and a VWAP right here. So the same section, all of this right here is just this. And above me, you can't see anything. Right? So if you go, oh, you know, look at these highs. I'll take out these highs here at 149. Well, realistically, it doesn't look like a good idea. Right? It looks like you're just going to probably get knocked out pretty quickly. You know, so zoom out, look at the larger picture, understand your area of interest, understand where the market's trying to go, look at liquidity. Right, liquidity you can find on Bookmap, you can find on your sales, and you'll see where liquidity is usually trying to sit, and wait for it to hit that mark. Once it hits that mark and it reacts, go with the flow. There you go. All right, I wish you the best this week. Right, start green, stay green, in green. If you have any questions or comments, I'm still trying to build this channel. Feel free to leave them. I'll be happy to answer anything. And other than that, I wish you the best, and I'll see you next week.